Welcome. Today, we're going to pull back the curtain on one of the most powerful tools in your leadership toolkit, the balance sheet. Now, if you're not a numbers person, don't worry. Our goal here is to make this crystal clear so you can lead with even more confidence and wisdom.
So let me ask you something. Have you ever been in this situation? Your team is just on fire. You're hitting your targets, your department is profitable, everything looks amazing on paper. You know exactly what you need to go to the next level. Maybe it's hiring a new person or getting that key piece of equipment. So you walk into your boss's office, you've got all your data, you make the pitch, and you get hit with, "That's great, but we just don't have the cash right now." And it is so frustrating. You're thinking, how is that even possible? If we're profitable, where is the money? Well, that exact question is why we're here today, and the answer is hiding in plain sight on the balance sheet.
You see, that gap between making a profit and having actual cash is why the income statement alone just doesn't tell the whole story. You need a different kind of report. Think of it like a financial health report for the whole organization.
And that report is the balance sheet. So what is it really? Well, think of it like this. If your income statement is a video showing your performance over a period of time, the balance sheet is just a single photograph. It's a snapshot on one specific day that tells you three really important things. What do we own? What do we owe? And ultimately, what are we worth?
And it all boils down to this one simple, powerful equation. Assets equals liabilities plus equity. Now, don't let the jargon throw you. It's actually way simpler than it sounds. It works just like your own personal finances. What you own minus what you owe is what you're really worth. That's it. This little formula is the key that unlocks everything.
Okay, so let's break that equation down into its three parts. Once you get these, I promise you, you'll be able to look at a balance sheet and know exactly what's going on.
First up, assets. This is the good stuff. Assets are simply all the valuable things your organization owns that have some future economic value.
You know, this includes the obvious stuff, right? The cash in your bank account, the inventory sitting in a warehouse, the computers and buildings you use. But, and this is important, it also includes money that isn't in your hands yet. See that last one? Money owed to you by customers? That's called accounts receivable. It's an asset because that money is legally yours, you just haven't collected it. All right, now for the other side of the coin, liabilities. This one's pretty straightforward too. Liabilities are all the debts and financial obligations your organization owes to someone else. It's what you owe.
This is going to be your big bank loans, maybe a mortgage on a building, but it also includes the day-to-day stuff. Bills you owe to your suppliers. That's called accounts payable. And get this, it even includes salaries you owe your team for work they've already done but haven't been paid for yet. That's all considered a liability.
And that brings us to the final and maybe most important piece of the puzzle, equity. Simply put, if you sold off all of your assets and paid back all of your liabilities, whatever is left in the pot, that's your equity. It's the real, honest-to-goodness net worth of the organization. Now, in a for-profit company, we call this the owner stake. If you're in a ministry or a nonprofit, you'll probably see it called net assets. But guess what? It's the exact same idea. And here's the kicker. Equity grows when you're profitable and you reinvest those earnings wisely. So really, your equity is the ultimate scorecard of your organization's long-term financial health and sustainability.
Okay, that's enough theory. Let's make this super practical. We're going to look at two simple, real-world examples to see how this all plays out. First, let's look at a business called Creative Widgets, Inc. On the left, their assets, cash, inventory, equipment, add up to $150,000. Now look over to the right. They owe $70,000 in liabilities. So assets minus liabilities leaves them with $80,000 in equity. See how it all balances? But here is the light bulb moment for you as a leader. Look at their assets again. They have $150,000 in assets, but only $20,000 of it is actual cash. The rest is tied up. This right here explains how a company can be worth a lot, but still not have cash for your new hire. Okay, let's check out a ministry example. Community Hope Church. Same exact principle. Total assets are $550,000. But whoa, look at that. $500,000 of it is the building. They owe $300,000 on their mortgage. That leaves them with $250,000 in net assets, which is their equity. So again, while they have a lot of assets, their ability to fund a new outreach program isn't based on the value of their building. It's based on the $50,000 they have in cash. See the difference?
So now you get it. But the big question is, how do you actually use this information to lead better? Let's talk about your playbook.
If you're leading a small team or organization and you are the finance department, don't panic. You can do this. First, just create a simple balance sheet for yourself every month. Second, and this is crucial, keep a close eye on your cash balance versus the bills you know are coming due. And third, just look at the trend over time. Is your equity, your net worth going up? That's a great sign you're on the right track.
Now, if you're lucky enough to have a finance team, your job is to be a smart partner. First, from now on, ask to see the balance sheet every single month, right next to the income statement. Second, ask good questions. Don't be afraid to say, hey, can you help me understand why our cash went down but our inventory went up? And finally, when you ask for resources, use this knowledge. Frame your request in a way that shows you get the bigger financial picture. Trust me, it makes a huge difference.
All right, you're armed with some powerful new knowledge. Let's make sure you use it to avoid the common traps that even experienced leaders can fall into.
Mistake number 1, the profit-only trap. That's when you only look at the income statement. Remember, profit is an opinion, but cash is a fact. Always look at the cash reality. Number 2, the asset-rich, cash-poor fallacy. That's thinking that a warehouse full of old product is the same as cash. It's not. You can't make payroll with old widgets. And number 3, ignoring creeping debt. It's so easy to let liabilities slowly grow without making sure you're also growing assets that actually generate cash. Be vigilant about that.
And really, this all comes back to a core idea: stewardship. Being a great leader isn't just about hitting this month's profit target. It's about building a strong, healthy, sustainable foundation so that your organization can be around to serve its mission for a long, long time. The balance sheet is your guide to doing exactly that.
So here's your one action item for this week. It's super simple. Just get your hands on your organization's latest balance sheet. Don't stress about understanding every line. Just find the 3 big sections we talked about: assets, liabilities, and equity. That one small step is the beginning of a whole new level of financial intelligence.